Indonesia's economy has experienced significant changes over the past decade. While there has been progress, challenges have also emerged. One major concern is the sharp rise in debt, both for the government and state-owned enterprises. This accumulation of debt has raised questions about Indonesia's long-term economic stability. On the surface, the government's debt-to-GDP ratio appears manageable, below the legal limit. However, this figure does not tell the whole story. A closer look reveals substantial hidden liabilities that paint a more concerning picture. State-owned enterprises, for instance, hold significant debt that is not officially included in government liabilities. These debts, however, pose a real risk, as the government would likely be responsible if an SOE faced financial distress. Adding to the burden are unfunded pension liabilities, representing substantial long-term obligations. When these hidden liabilities are factored in, Indonesia's true debt burden is significantly higher than official figures suggest. This situation raises serious concerns about the country's ability to manage its financial obligations without jeopardizing its economic future. The growing debt burden has the potential to impact various aspects of the economy, including economic growth, revenue collection, and investor confidence. Addressing this issue is crucial for Indonesia to maintain a healthy and sustainable economic trajectory. Indonesia's economic growth has been relatively steady in recent years, but there are signs of strain. The increasing debt burden is a contributing factor to this slowdown. As the government allocates more resources to service its debt, less funding is available for crucial investments in areas such as infrastructure, education, and healthcare. This lack of investment can hinder economic expansion and limit opportunities for the Indonesian people. Furthermore, the government's efforts to increase revenue collection have not kept pace with the rising debt. Indonesia's tax-to-GDP ratio remains low compared to other countries in the region, indicating inefficiencies in tax collection and a narrow tax base. This shortfall in revenue collection exacerbates the debt problem, as the government has to borrow more to cover its expenses. The combination of rising debt and sluggish revenue growth presents significant risks to Indonesia's economic outlook. One pressing concern is the increasing cost of servicing the debt. As the debt stock grows, so too do the interest payments. These payments consume a larger portion of government revenue, leaving even fewer resources for essential public services and investments. Moreover, elevated debt levels can negatively impact investor confidence. When investors perceive a country's debt as unsustainable, they may demand higher interest rates on loans or even withdraw their investments altogether. This loss of confidence can make it more expensive for the government to borrow money and can hinder economic activity. Addressing Indonesia's debt challenge requires a multifaceted approach. The government needs to implement policies that promote fiscal responsibility, enhance revenue mobilization, and foster sustainable economic growth. One crucial step is to improve debt transparency. The government should provide a comprehensive account of all liabilities, including those of state-owned enterprises and unfunded pension obligations. This transparency will allow for a more accurate assessment of the country's fiscal health and enable policymakers to make informed decisions. Furthermore, the government should prioritize fiscal consolidation by controlling spending and increasing revenue collection. Tax reforms that broaden the tax base and improve tax administration are essential to enhance revenue mobilization. Meanwhile, the government should not focus on how to collect taxes easily from the middle class and low-income people, which has raised a concern over social justice. The plan for the government to increase the VAT in 2025 should be revisited and even should consider to make it lower. Please leave your thoughts and comments on the column below if you have any concerns on this topic.